can't save you and I can't make you profitable if you don't want to become profitable. So do yourself a favor, watch the entire video, and let's get into it. All right, so first of all, we have to understand that there's only 3 phases the market could be in, okay? There's the continuation phase, consolidation phase, and then there's the liquidity phase. After the liquidity phase comes the continuation. So it just repeats itself, right? Continuation, consolidation, liquidity, right? Continuation, consolidation, liquidity, right? You get the idea at this point, right? But this is basically what we want to utilize. Once trading is repeatable, you can make a shit ton of money in trading. And this is repeatable right here. After the liquidity comes the continuation, which is what we want to take advantage of. So basically, this is all it right here. The red boxes, obviously continuation, then consolidation, then liquidity. You get the idea, right? But whatever. The continuation, the first phase, is the main push and the overall higher time frame trend. So in this case, it's obviously bullish. Look at these 2 bullish candles right here. The trend is obviously bullish on this example and obviously bearish right here. Now, second phase, consolidation. This is where price is moving sideways, doing something like this, right? Just, moving sideways. And whenever price is moving sideways, there's no clear direction, right? So price is generating buy side liquidity and sell side liquidity. So there is a resting liquidity up here, and liquidity equals stop losses equals money, right? And money equals liquidity. It's all a pattern, right? It's all, repeatable, right? But whatever. There's stop losses up here and there's stop losses down here from retail traders and institutions. Now, what does price want to do? Well, it obviously wants to hunt these stop losses, hunt this money, hunt this liquidity, and then it's going to move. So either price is going to do something like this, push up, liquidate buy side liquidity, and then push down, or price is gonna, push down first, liquidate sell side liquidity right here, and then it's gonna push up. And that is what we want to take advantage of. So we want to take advantage of the move post liquidity grab. So this leads us to the third phase, the liquidity phase right here. Green box in the bullish example where sell side gets liquidated. I know this is maybe a bit confusing right now, but trust me, it will all make sense later on into this video, right? So just keep watching here. So sell side gets liquidated right here because there are retail traders that had their stops down here. Imagine retail traders getting into buys after this bullish closure right here. Let's actually make it purple right here. Stops below here. What happened? Well, price just straight up pushed down, liquidated all those stop losses down here. Stop losses equals liquidity, liquidity equals money. It hunted all this money right here and, basically manipulated them, stop hunted them, whatever you want to call it, liquidated them, and then it pushed, because after the liquidity phase comes the continuation phase, the big push following the higher time frame trend. So this is basically the foundation, right? This is what we want to utilize to our advantage. Now, this may be a bit confusing, but just keep watching here. It'll all make sense. So in the bearish example, continuation, consolidation, where price moving sideways, generating buy side, sell side liquidity, aka stop losses, aka money, right? Then the liquidity grab right here liquidates buy side liquidity in a bearish example because there are resting stop losses up here because retail traders have gotten into sells right there, stop loss right here, take profit down here. Then comes the liquidity grab after the consolidation phase. After the liquidity phase, then comes the continuation, the big push following the higher time frame trend. That's basically it, right? So now, once you understand this, I'm not sure if you understand this, but it will all make sense later on. But let's get into TradingView and let me show you some examples of this in real time. So most retail traders have been taught that, after price just breaks out of a significant level, let's say this is the significant level, wait for a retracement to that level, wait for a rejection and take buys right there with the stops down here and take profit, up at new higher highs basically, right? This is what most retail traders are doing. Most institutions are doing this as well, right? But what's the problem here? Well, if most traders are unprofitable, right, and most traders has their stops down here, what does price want to do? Well, is it just going to shoot up just directly and, everyone makes money and the market loses money? No, it's obviously not going to do that. It's going to realize that, okay, if everyone has their stops down here, it's most likely going to push down, liquidate them, manipulate them, stop hunt them, and then it's going to move in that overall bullish direction, right? You see this, right? This happens over and over again every single day. So now, with this information, what do we need to do? Well, you obviously don't get in or you don't enter where most traders are entering. You enter whenever most traders has gotten stopped out, right? That's when you enter. So your entry wouldn't be right here. It would be right here, right? I hope that makes sense. And then you're basically just making, taking advantage of the overall higher time frame trend, waiting for sell side to get liquidated below previous lows, waiting for retail traders to get stopped out, and then you take advantage of that move. So I also want to clarify this, right? If price was this easy to read, breakout, retracement to a significant level, right? After price rejects that level, everyone would get into sells right here, stops up here, and take profit down here. But the reality is that if price were this easy to read and price were just, do something like this, everyone would be a millionaire at this point. Everyone would be, making money and catching all these amazing trades. But the reality is that 99% of traders lose. So your job basically is just to do what the top 1% is doing compared to the 99% of traders. Because if 99% of traders are losing money, you need to be in that top 1%, which is, making money, basically becoming profitable, right? So this isn't, what's going to happen. Yes, this is basic, theoretical market structure where, price just breaks out, retraces, continuation. But this isn't going to happen. Price is going to break out, retrace, and then, reject that level, trapping all these early sellers. And then it's going to, manipulate them, liquidate them, stop hunt them, and then it's going to move in that overall direction. That is what the market's going to do. So now this right here is basically the entire strategy that made me rich, okay? But you have to understand how to use it as well in order to become profitable, okay? So this is the bullish example on a 30-minute time frame. This is on the 15-minute time frame. This is the exact same price action, by the way. You can kind of draw a line here. 2 30-minute candles is obviously 4 15-minute candles, right? Vice versa, bearish example, 30-minute time frame right here, and this is the 15-minute time frame, same exact price action right here. But with this information, right, most retail traders, and what I've taught you before, like a few minutes before, was that most retail traders get into buy positions right here after a closure above this significant level. Remember, this is a significant level. This is a level where price breaks out and closes above. Now, most retail traders are getting into buy positions right there, stops below, right, and then targeting, all-time highs or new higher highs up here, right? But this is completely wrong. What happens here? Well, because everyone has their stops down here, market is going to push down to those stops, liquidate them just by a single pip. And I know you've tried this before. You've gotten into a position, you get stopped out or wicked out by a single pip or like such a small amount, and then price moves in your overall direction, which you were anticipating, right? And this is completely normal, right? This is because you were the retail traders at this point. Now, I'm giving you the information to be, don't do this. Well, just wait for the retail traders to get liquidated and then take advantage of that move like that. So your entry wouldn't be here, it would be here after a liquidity grab. So to break it further down, this is the 15-minute time frame, right? Break above, closure above. Most retail traders get into either buy positions right here or buy positions right here after price starts retracing. Remember, I was talking about this breakout, retracement, rejection. This is basically it. Breakout, retracement, rejection. Most retail traders get into right here, stops below these lows right here, anticipating new higher highs. What happens? Well, because everyone and their mother has their stops down here, most retail traders are getting stopped out, liquidated, and then price is going to move in that overall bullish direction. So this is the exact same move, just on the 15-minute compared to the 30-minute, right? Vice versa. Look, most retail traders are, waiting for this breakout. They get it. Wait. Price retraces to this significant level. Price starts to reject that level, right? Most retail traders getting into sell positions right here, stops up here, because the idea is it's honestly good, but the timing is off because they didn't wait for a buy side liquidation, right? They didn't wait for a liquidity grab. And remember, CCL continuation, right? I can even draw it out in like circles like before. This is the let's draw it out in the red circle. Continuation, consolidation, and liquidity. And what comes after the liquidity? The continuation again. It's a repeatable cycle, right? Continuation, in the orange circle, consolidation, then there is the liquidity, and then there is the continuation again, right? Continuation, consolidation, liquidity happens over and over again. So your entry wouldn't be right here after price starts rejecting, right? It would be right here after price already stop hunted, manipulated, and liquidated all the early sellers, right? That's how you want to treat this trading. That's basically what got me profitable, and that's the strategy that made me rich, okay? So let's get into some trading view examples of this strategy so I can show you how to implement it as well. So I'm on US 30 right now. This is live time, by the way, and I can already see like 5 different examples right here. So a liquidity grab, continuation, right? Liquidity grab, continuation, right? What comes after the liquidity phase? Continuation. What comes after the continuation phase? Consolidation, then liquidity, then continuation, consolidation, liquidity, continuation. You get the idea, right? CCL. Keep that in your head, right? Once you learn this skill, once you learn this strategy, master this strategy, it is literally a money printer, okay? You can make so much fucking money with this. It's honestly insane, okay? Another one right here, look, broke previous 1 hour lows, broke these previous 1 hour lows, liquidity grabs, continuation, right? Massive move post liquidity grab. It's fucking insane, okay? Let's go over some more. Oh, wow. This is from the last drawing. Let's go over some more. Where did this happen? You can also kind of see it here. Broke these lows, liquidity grab. This isn't that clean, but still a continuation up. Where can we see it? You could also see it, right? Why do I keep hitting this button. You can also see it right here. Look, broke these lows, liquidity grab, continuation up, right? Happens over and over again. This is more clean, actually. This is way more clean. Look, this is the playbook. This is the example right here. Look, breakout, or yeah, basically breakout, consolidation right here. Then price is trapping all these early buyers because buyers, retail traders, NPCs are getting into buy positions right there or here, right, with these stops down here, anticipating this move to, I don't know, up to these levels, right? Just new higher highs, right? What happens at market open? Well, we shoot directly down, liquidate everyone, and then it's going to move in that continuation phase. So after the liquidity, continuation, right? We can even draw it out in circles just to make, everything a bit more clear. So continuation, consolidation, liquidity, right? And what comes after the liquidity? Continuation phase. It happens over and over again. You can look, why do I keep doing this? You can even see this example. So your entry wouldn't be right here. It would be right here, right? So, and this also has a like 82% win rate, 83% win rate, based off my experience, based off my statistics over these last 2 to 3 years of using this, okay? So you can also see it right here. I mean, I could go on and on and on. Look, broke previous highs, right? Liquidity gaps, continuation, big ass move. This was like what? Fucking 400, almost 500 pip move right here, post liquidity grab. Now, these are obviously all in hindsight, and I could literally say whatever I want to because this is just trading view, and you could just believe that I didn't take any of these trades, so I don't really trade this strategy or whatever, but I honestly do. So let's get into some live trading examples of me making multiple thousands of dollars in a day in a single trade using this strategy. So let's go over the live trading examples and let me show you how to implement this in live trading time, real time basically. So I've got a live example right here. This is a bearish play. I made about $1,000 in 40 seconds here, and you can already see the analysis, right? The overall trend is bearish right here. This is the continuation. Then price starts to slow down, move sideways, no clear direction, aka consolidation phase. Then I'm anticipating that this up here will be the liquidity phase. Then once it starts flipping bearish, we'll continue down to these levels right here. That's what I'm anticipating. That's basically CCL right there, right? That's the entire strategy, right? So I know this because I've traded this strategy for years now. I placed my sell stop right there. I mean, I'm explaining the entire trade process. Obviously, I'm expecting a move down, get activated, and I closed about $1,000 in profit or whatever. I mean, that's a bearish example right there. Just a clear continuation. Then the consolidation, you kind of get it at this point, don't you? Like, I think you should, right? Liquidity grab. Then what comes after the liquidity phase? Continuation, right? Let's go over a bullish example of this as well. So right here, I've got a bullish example as well. You can also see the live account above my head. Wait, I can remove my, yeah, you can see it right there. I have proof of everything. Don't worry, this is not demo. This is not a typical trading demo guru, right? But whatever, this is a bullish example right here. You can already see the same analysis, right? Continuation. There's the 4-hour time frame on my MT4. Continuation. Oh, it's actually easier to draw it over here because there's the continuation. Then this is the consolidation where price moving sideways. Then at market open, well, what's price going to do? It's going to liquidate all those early buyers that had their stops down here. They get liquidated, manipulated, stop hunted with a liquidity grab, right? Then what comes after the liquidity phase? The continuation, which I'm anticipating will happen, right? This is what we want to take advantage of it, basically. So place a buy stop below, or I mean above previous highs up here, anticipating that price will move up. Let's see what happens here. So pretty much just get in right there. And straight up, no drawdown whatsoever because there's so much volume from this liquidity grab. Break even straight off the bat, zero risk on the table now. And let's play price here. Price pushes up. I make about $1,000 again, I think. Yeah, 1.1K or something. And I made like, this was like a 3.5K week or something. So pretty lovely. That was a bullish example right there. Let's go over one more example. I want to show you one more because that is very clean. This example is very clean. So let's go over another live trading example. So right here, we've got another trading example, right? So the overall trend is obviously bearish, right? Look at this. Lower low, lower high, lower low, lower high. What does most retail traders do? They get into sells right here, stops up here. That's why I got a red line right there. Stops up here, and they're anticipating take profits down here, right? That's their move right there, right? But what I don't do is I don't enter where, 99% of traders are entering. I enter whenever 99% of traders has gotten stopped out, right? What do I mean by that? Let's look at the price here. I'm anticipating that, we'll get that move to continue up first. We'll get that liquidity grab first, liquidating previous 30-minute or 1-hour highs. Yeah, 30-minute highs. Then once we start flipping bearish, we can continue down, right? Post liquidity grab. So right here, basically, look at this. This is the most cleanest setup I've taken in a long time, right? Price is literally just pushing down, breakout, breaks below, closes below this significant level right here. Look at this, closes below. What does price do at market open? This is 10 minutes after market open. So market open shoots directly up, liquidates all the early sellers, right? Their stops has now gotten liquidated, and then it's going to continue in that bullish, or I mean bearish overall higher time frame direction. So price literally just doing this, right? That's it. And we want to take advantage of this big move post liquidity grab, because I mean I can draw this out for you as well. Look at this. Continuation, consolidation. You should get the hang of it by now, right? Liquidity grab, then what comes after the liquidity phase? Continuation. That's what we want to take advantage of, right? So let's see here. Let's play this. I get activated right there. Zero drawdown again because there's so much volume from the liquidity grab. Just a straight push down basically, and I make about what, $1,000 again, something like that. Yeah, 1.1k. Beautiful. Price starts rejecting after tapping my level. I mean, it doesn't get any more simple than that, right? Now, boys, once you learn this strategy, once you implement it into your own like systems, and once you master this strategy, it is basically a money printer. It's gonna make you so much fucking money, and I'm sharing it all for free here, okay? I've got a 16-page PDF file, complete for free as well, going over this entire strategy right here. Look, breakout plus liquidity grab, you know, breakout of significant level, liquidity grab, continuation post liquidity grab. Like, this is all for free, by the way, and I'm not here to gatekeep you any information, okay? Like the typical trading guru does. The typical trading guru flies to Dubai, rents a Lambo, rents a Rollie, right? And then he basically flexes his lifestyle on you so you can buy their course. They gatekeep you information so you can buy their course from them. But I'm not that type of fucking guy, okay? I'm gonna, you know, provide all the value you would ever need in order to become profitable on this channel. I mean, including this playbook right here. So if you want access to this, it's in my Discord. If you found this video helpful and you liked it, leave a like, comment, subscribe. It means basically means the world to me. So please do that if you want to. If not, no worries. But yeah, that's basically the video. That's basically the strategy that made me rich or profitable. You can kind of say both.